Let's have a quick conversation about how to reduce obsolete inventory this year. So, here are the trends I want you to really pay attention to. The thing is, when you think about inventory obsolescence, you are thinking about a shrinkage to your balance sheet, right? Because inventory is an asset, is a short term asset. So, if you have obsolete inventory, you are talking about your balance sheet being reduced over time. So, in today's conversation, I want to explain to you how to control and minimize obsolete inventory so that you can improve retail business performance overall. This is really important, okay? So, let me first define for you what obsolete inventory really is. So, obsolete inventory, also known as dead inventory or excess inventory, actually consists of products that are no longer useful for sale. In other words, you can't sell those products. You can try, but you're not going to sell them. So, obsolete inventory includes outdated technology models, expired food or pharmaceuticals, items damaged in transit, products that failed quality control, overruns of promotional giveaways, and also in some cases, you might have excess seasonal merchandise. So, accumulating obsolete inventory occupies physical warehouse space and actually ties up capital unproductively. So this is really important. So it means what? It means that you got to really have a clear idea about how to liquidate obsolete stock, because the liquidation of obsolete stock frees up square footage for faster moving products. It also unlocks cash invested in unsaleable goods to reinvest in marketing. Let's say marketing inventory that can really sell fast. Okay, you want to have inventory that's aligned with current consumer trends and demands, especially if you are in a niche that's really subject to trends all the time. You have to pay attention to that. So, what are the causes of obsolete inventory? You have a lot of causes. A lot of causes. You might have a new product launches, changes in consumer preferences. There are certain things you can't control. Okay. You also have a product damage or deterioration. Something happens. You have a poor demand forecasting. Now that you can control, and you also have ineffective inventory management. Again, you can control that as well. Now, let me give you a few tactics here. When you think about obsolete inventory, you want to really have a way to identify obsolete inventory really, really early on, because the last thing you want is to actually, discover those dead stock at with a lot of delay. So, what you want to do here is that you want to really review sales reports regularly. Now, see, the whole thing is that why should you identify obsolete inventory in the first place? I think I said this before. Inventory is an asset, so inventory obsolescence actually is going to trigger a shrinkage of your balance sheet. So you got to really make sure that you have a strategy in place to mitigate that process, to mitigate that obsolescence. So you want to review sales reports. Okay, often the first sign of obsolete inventory is a drop in sales. For instance, if winter jackets are not selling well throughout the peak season, it's actually a strong indication that they might become obsolete. So to catch this early, you want to use your inventory management software to actually track product sales over time, specifically targeting items with consistently low or declining sales. You also want to check expiration dates. This is going to give you a strong indication of whether or not the inventory you are carrying actually is still relevant. Okay, and but see, the whole thing is it depends also on the niche you're in, because products in certain retail sectors, such as cosmetics, have a limited shelf life. In addition to being regulated by institutions such as the FDA, right? So let me give you an example. A batch of sunscreen might be nearing its expiration date. So instead of waiting for the product to expire and become obsolete, you want to use your inventory management system to set alerts for items approaching expiration dates. And that process is very easy, but very, very, very efficient. So this proactive approach allows you to take action, such as selling the batch of sunscreen at a discount. At least you can save, you can save some money, really. So another way to actually, if you want to really identify obsolete inventory really fast, you want to inspect stock condition. It's one of those things where I'm not really talking to you about just like a regular inspection. No, here I'm speaking about something comprehensive, something granular, something that's methodical. Okay, you gotta have a clear idea about what you're looking for and the kind of signs that could really trigger an in-depth review. So when I speak about stock condition inspection, I'm speaking about you allocating staff, you allocating resources, you allocating your supply chain process to make sure you are looking at stock conditions from A to Z. Some products may become unsellable due to physical deterioration. T-shirts may not have an expiration date, but they can fade if exposed to prolonged sunlight, which actually decreases their market value, potentially making them obsolete inventory. So, so to prevent this, you want to schedule regular stock conditions checks to see what you really have. You know what kind of products you have in your warehouse or in your logistics processes. Another way to actually identify obsolete inventory real fast is to compare it to purchase orders. It's all about doing a quick compare and contrast. Pretty easy. So basically, you want to compare current stock to recent purchase orders. That way, you can really see what's happening historically. You can see what's happening in terms of trends in the industry. You can use you can use some benchmarking analysis to see what's really happening. So if a particular brand of sneakers, for instance, hasn't featured in any purchase orders for several months, this could be a sign of obsolescence. Okay, and again, it's one of those things where you have let's say a proactive approach here that allows you to spot things early on. So you can use, in this case, you can use your inventory management software to actually cross-reference items in stock with recent purchase orders and flag any potential issues right off the bat. So this will really help you be more proactive once again. Another way to actually spot obsolete inventory real fast is to verify inventory accuracy. See, the whole thing is that this goes back to what I said to you about the quantifiable aspect of inventory. Inventory being a short-term asset, in other words, being a balance sheet item, you want to really ascertain its accuracy all the time, and you can ascertain its accuracy through software checks or by manually actually checking stock items. Okay, so maintaining accurate inventory records is actually a vital part of controlling obsolete inventory. So regular inventory audits ensure that the data in your inventory management system matches your physical stock. And the cool thing is that this inventory verification is actually in line with US GAAP and also IFRS. US GAAP, US Generally Accepted Accounting Principles, and IFRS, you are speaking about International Financial Reporting Standards. So those are widely accepted, widely known accounting procedures. So by actually verifying your inventory regularly, you are complying with accounting standards. You also want to analyze customer metrics. So customer buying patterns can provide insights into potential inventory obsolescence. So let me give you an example. If a specific toy line is consistently unpopular among key customer groups, it might actually suggest these items are becoming obsolete, right? I mean, the market will always let you know. The public will let you know. They'll let you know early on. You just need to analyze your data, your sales data more often, your stock data more often, your inventory data more often. So use your inventory management system to analyze sales data by customer or customer group. And then you want to act on these insights to improve your obsolete inventory management, right? So you want to actually use a strategy that allows you to dig a little deeper into your data to actually uncover whatever the market is telling you, especially when if you are operating in a very competitive niche, you want to pay attention a lot. Now, let me talk to you about liquidation. Let me talk to you about how to get rid of obsolete inventory. I mean, it's one of those things where at some point you might want to really free up some shelf space to actually reallocate your capital, to reallocate your assets more productively. Okay, so implementing strategies to manage obsolete inventory is kind of critical to effective inventory management. So I want to give you here a few methods that you can employ right now to reduce or eliminate obsolete inventory. And again, all those methods that I'm giving you here, you don't need to have a large enterprise or a large organization to implement them. You can still implement them if you are a small company. Okay. The first thing you want to do is you want to sell at a discount. So if the idea is to actually free up space, free up money, free up capital that's tied up in that inventory, you might want to sell a discount. Now you might say, well, I'll be losing money, but hey, at least you're getting something, right? You're getting something. You might get maybe 80 cents or 90 cents or 75 cents on the dollar, but that's still good anyway. Okay, so selling items at a discount is a common way to clear slow moving inventory. Your inventory management software can help identify such items, and you can then create promotional, let's say, promotional offers or clearance sales to move these products more quickly and prevent the accumulation of obsolete inventory. When you have such accumulation, you are losing money big time. I mean, you might not be losing money directly, but you'll be losing money indirectly. Also, you want to donate to charitable organizations. I mean, this is kind of cool. This is good for your for your tax filings, but it's also good for karma, right? I mean, if you believe in karma. But hey, listen, if you can do something good, why not? Many items considered obsolete inventory in a retail context may still have practical use. Okay, for example, clothing items from last season can be donated to local charities, and this frees up storage space and may actually carry. I think I've said this before. Actually, the benefit of tax deductions, especially if you are thinking about tax deductions at the state level, but also at the federal level. Also, one thing you can do, you can actually explore write-offs. So if you want to liquidate, if you want to get rid of obsolete inventory, you can think about write-offs, and you can also think about returning the items to the supplier. Because I mean, of course, you got to have a good relationship with that supplier, and the supplier has to agree to receive the inventory back. Okay, so when I speak about write-offs, when items can be sold or donated, they can be written off, and this process involves removing the items from your financial statements, so your balance sheet, your income statement, your cash flow statement, and your owner's equity statement. And then when you remove them, you are providing a more accurate representation of your company's financial health. Okay. Now, while you won't recover any money through write-offs, they can actually be grateful in managing inventory obsolescence and may offer a tax benefit. So this is let's say this is a path worth exploring. If you need more information about that, you can ask your CPA, your company's CPA, or you can just ask us in the comment section, and we'll certainly get back to you. Another strategy is to actually return the item to supplier. So if your supplier contracts allow returns or buybacks, you can approach them to return obsolete inventory. Now, though you are unlikely to recover the total market value, returns can help reduce obsolete inventory and recover some cost actually. You might get maybe 10 cents on the dollar or 30 cents on the dollar, but hey, listen, it's still something, right? And so, you want to review your supplier contracts and understand the return or buyback policies, and as well as any, let's say, any potential restocking fees or penalties before making a decision. Now, the supplier is going to charge you. I mean, they may charge you a restocking fee, right? So you have to really ask yourself, are you willing to actually absorb that fee? And really, is it really worth it? Given the value of the item you are returning, given the value of the inventory you are returning. If you want to really get rid of obsolete inventory, you can sell to liquidation companies. There are fortunately a lot of companies that specialize in liquidation. So liquidation companies they specialize in dealing with obsolete inventory. They buy such inventory and resell it, often at lower prices. So while you won't recoup the total market value, selling to a liquidation company can generate revenue and quickly free up valuable storage space. Also, you might want to upcycle or repurpose. So consider whether your obsolete inventory can be repurposed or upcycled. So unsold fabric, for example, could be used to create a new line of accessories. So while this approach requires creativity and additional resources, it can turn a potential loss into a profitable product. It's all about your power to innovate. It's all about your capacity to innovate. So let me give you a few extras before we close to this conversation, okay? So what's actually the best thing to do with obsolete inventory? It really depends, okay? Options include selling at a discount, donating to charities, or returning the item to suppliers. You have to really see what kind of situation among the six that I just told you a little earlier apply to your particular case. Now, how do you avoid obsolete inventory this year? You just need to make sure that you have a more accurate forecasting. You have an efficient inventory tracking system, and you want to regularly review sales and customers demand trends, so you have a clear idea what the market wants and how to really position yourself to actually embrace what the market wants. And how do you account for obsolete inventory? This is actually inventory that's typically written off from financial statements, representing a loss in inventory value. This process helps minimize obsolete inventory in its impact on the financial health of the business, and you can definitely sell obsolete inventory. Okay, you at least see the whole thing is you want to first try to sell it before you try all the other strategies that I've shared with you in today's conversation. So the bottom line to this conversation, I explained to you everything you need to know about obsolete inventory. I spoke about the trends, the tactics, the strategy, the extras, and now the bottom line. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.